Hey bosses, real quick before we get started, I want to let you know about our sponsor, Indeed.com. They are the #1 job search and job posting platform out in the US. We'll tell you more about them during the break. Welcome to the Invest Like a Boss podcast.
I'm Sam Marks.
And I'm Johnny FD. We're self-made entrepreneurs who invest our own money and use modern technology to invest like a boss.
Join us each week for exclusive interviews with our network of modern investors, business owners, and multimillionaires to discover new ways to invest our hard-earned cash.
Hey bosses, this is Johnny, and welcome to episode 152 of the Invest Like a Boss podcast. I am in Mau in Pasakuta, Sri Lanka at a super nice resort. And Sam is in his parents' basement.
Check out the video. Johnny, for the last 5 episodes, has had this beautiful tropical background that I thought was a fake Zoom background. But now I can see the rotating. What are those those standalone fans that you find in bungalows in Asia?
So it's hard to tell. I'm gonna move my camera real quick, but this is actually like a $300 a night resort that I'm staying at.
Oh, so it is a super nice resort.
It really is. Yeah. You can check my Instagram. It's beautiful. Just the room itself is super dark. I don't know who did the lighting, but it has a semi-private pool just through that window. And a pool on this side too. So I have the pool to my right, the main pool, a semi-private pool to the left, and then right in front of me, if I open the front door, is the ocean.
Did you get a super sick deal on this, or are you just splurging for some other reason?
So it turns out Johnny FD is now a YouTube influencer, and I get to stay at these places complimentary for making videos about it.
Are you reaching out to them and saying hey, I'll come make a video if you let me stay for free?
Yeah, basically.
Are you promising to have better lighting when you make the videos for them than you have now?
Yeah, definitely. And I'm not using my MacBook camera either, because this is a brand new 2020 MacBook Air, and it has the worst webcam in the world. It's a 720p piece of crap.
Dude, this is pretty exciting news. We'll have to talk more about it on our quarterly updates, which you got cooking. It sort of ties into this episode of what we're about to record with Equity Estates and talking about super pimp properties and resorts.
Yeah, I'm actually excited. This episode came as a recommendation from somebody in our Patreon group. If you guys haven't joined yet, you can go to investlikeaboss.com, click on Patreon, support the show, and you can suggest guests. You can hear about all of our upcoming episodes and ask the guests questions, or make sure we ask the guest questions, as well as get bonus episodes like our quarterly updates. So I'm excited for this one.
This is going to be all about lifestyle investing. This is going to be pretty cool. The more I looked into Equity Estates before the interview, the more I got excited about it. So we're going to have on their CEO, Phil Mekelburg, and we're going to talk about the opportunity. It's definitely, basically, Equity Estates is an alternative for a second home without the hassle. And they have properties, I think, in about 40 different locations, 40 different markets around the world. And they partner with other funds, they're considered a fund, all around the world. So you have access to really sick spots, really nice villas from New York all the way down to the Caribbean and into East Asia.
Yeah, and at least on paper, this sounds exactly like what you and I want, is access to homes kind of all around the world, nice places, but also 100% hands off. We don't have to do any of the maintenance or keep track of anything, but also with upside potential and having it actually be investment. So this sounds really great. I'm interested in hearing more about the details, the fee structure, and the investment, opportunity. And then you and I will come back after and we'll talk about what we thought of this as an investment, as well as if it's something that we would do lifestyle wise and where we would stay.
I like it. I already know where I would stay.
Okay.
But let's get into it.
All right.
Philip, welcome to the show. It's great to have you on.
Thanks. Happy to be here, Sam.
I was telling Philip I admired his his podcasting setup because it's more pro than me, even though we're doing this kind of a couple times a week, but always in limbo with locations. So this is basically what I always have in my bag. But looks like
I can hear you crystal clear. You look good. You sound good. It's working.
Appreciate it. I got to get one of those black Suave polos from you guys after this.
Sure. We'll send one your way. Be happy to.
I think this is an episode that's going to jive really well with not only Johnny and myself, but a lot of our listeners. We talk about real estate a lot. We talk about vacationing a lot around the world. I just got a property in Barcelona, and nice. I just see the beauty of this. I think it's a lot something that people have talked about a lot, but never really seen a great opportunity. So happy to have you on and discuss equity estates.
Happy to be here. Thanks. It's going to be fun. How much time do we have? An hour, 30 minutes?
Yeah, whatever? We'll see how much we have to talk about. But yeah, I would say
okay, 5 minutes,
30 minutes plus 5 minutes. So I hope more than that, but we'll see.
You hang up on me at any time. No, I love that you have a place in Barcelona. That's beautiful.
I appreciate it. So, I mean, we talk a little bit about that and talk about some of the operating costs and some of the cons to owning a place, especially overseas. But first, I mean, be good just to get a background. I know you guys have been in business since 2006, but it'd be good to get a little brief background on yourself and Equity Estates and how that combination came together.
Sure. It's been an interesting past. Some say I'm a player of many, master of none, like a Renaissance guy. I've worn a lot of hats. I've worked for others and I've worked for myself. So I have a prior life. I was a management consultant for a bunch of years. Then I had a retail and wholesale business, which I built up and sold. And when I was an employee working for others, I was in media and sales of radio events and magazine space. Then I was actually in a development role for some specialty finance tax products. So I've worn a lot of hats. Mm-hmm. And in 2005, to fast forward to Equity Estates, a friend of mine was a membership director for a destination club, which at the time in 2005, there weren't many of them, but those that were around were fast growing. And that was a model like a country club where people would write a very large check, 6 figures. And if you read the documents, all they really had was a right to use someone else's homes, usually some billionaires' homes. Like the industry was just trickled with billionaires that had homes, and they said, I'll buy more homes and we'll set up this country club and let people use them. And they'll like that there's consistent quality, daily housekeeping, concierge support. But you wrote this big check and it was structured like a membership deposit. And if you want to get your money back, the small print said, notify the company and you'll get 80% of the money you get, 80% of what you put in, you'll get back after 3 new people join, which to me sounded like a little pyramid scheme. Yeah. But anyway, so my friend was really talking about that. If you asked him, he'd say, I was just telling you about how much fun my new job was. We would all say that he was trying to sell us on buying a membership. And my initial reaction was, wait a minute, who owns all the real estate? My boss, his name's Richard. Wait a second. That makes no sense. My dues pays the mortgage? Yes. He's got all the real estate? Yes. He gets all the upside? Yes. These markets have been doing double-digit appreciation in the 15 years prior to 2008, actually. So we knew that there's a big chunk of money there. Obviously, someone was taking. So I just said, Mom didn't raise me that way to go build someone else's real estate portfolio. Like, I want a piece of the action. he said, that's not how it works. And you don't really should be worrying about that. Like, just enjoy the fact that you have a nice quality home to go to, which makes sense. And that was really the lure for a lot of people. But a year later, he and I kept in touch. We both went to Cornell together. We both were entrepreneurs. So, we were always kind of chatting about business and stuff. And he said, I've had that same conversation with a lot of prospects and maybe we should do something. And I said, great, whenever you're ready, let's do it. And they got into that chicken dance of like, well, are you going to quit your job? Are you going to quit your job? Are we really going to do this? Mm-hmm. And so we said, before we jump down that path, let's call your boss and tell him we want to have a method for people to share in the upside and have some risk and reward in that. So we placed a call and Richard says, you can't even keep up with the leads you got right now coming in. Why would I want to have a new division and share some of the appreciation? Like, no, thanks. but if you guys really committed to it, go ahead and, be on your way. So he did, he quit, I quit. And then we spent a good 8 to 10 months developing the model. And that led up to really the summer of 2006. And, for better or for worse, I guess there's a lot that we didn't know. So it was our first offering, and we set it up as a private placement, and we're just knocking on doors with accountants and lawyers and saying, we want to share in the upside in this. So like, how do we do that? And so we of course broke it down to what it would look like if a bunch of friends went in and bought a beach house. Like a lot of people do that, or a lake house or whatever. And we said, we just want to supersize that. So, we'd have an LLC, we'll put money in. And before we knew it, we had basically outlined what is a traditional private placement. And what's unique is the asset class is vacation homes instead of some other industry or type of business. And for us, we weren't trying to deliver cash on cash returns from renting out the space in these homes. We wanted them to be available exclusively for the investors. And we intentionally underutilized the homes. And that's been our model since then to now, whereby a full home is about 60% occupancy. In fact, specifically, every time that we have people invest an amount commensurate with how much they want to travel. So 15 nights, 30 nights, 45 nights. And we call that an executive, an elite, or an advantage membership interest. They're writing a check for cash. They're owning a piece of a company. Now we're up to Equity States Fund 4 LLC. So someone's buying a piece of that entity, and that's the entity that takes that cash. And we have an operating agreement, and we buy homes with that. And once we have 210 full nights of expected use, we call that a full home. So if you put 210 over 365, that's where you get that 57, 60%. I'm rounding up a little bit. Occupancy, we just thought that was a good way to share. And the success we've had is because we actually underutilize. We're not trying to use every single night in the portfolio. We don't rent out those nights that aren't used. We want some flexibility. We want people to be able to travel with short-term notice, and people that want to plan ahead into the future, we want them to be able to travel. And of course, with our model, we have this guaranteed liquidity date. So we actually target a time frame of a number of years where we have an effort to sell the homes and then distribute everyone's money back, 100% first, and then 80% of any profits thereafter, just like any mutual hedge fund that would liquidate that way.
So for someone that just approaches you like the elevator type of thing, how do you describe Equity Estates? Not necessarily the investor pitch, but just the kind of 1 to 2 sentence summary of what it is.
It's a second home alternative. So if you like vacationing in a second home, this is an option. A fancy term would be collective asset ownership, right? Let's say a few people go out and buy a home, but to have a professional overlay and have a lot of homes, like a dozen of them. Then we got $50 million of nice vacation homes instead of just one $3 million home. So the layman's the layman description, falls along those lines of having a chat about vacationing in a nice home, beachfront, ski in, ski out, a nice city that you want to go to, some domestic, some foreign. And if you're doing that and you've ever rented, that these places go out for, $3,000 or more a night. Right. And we're sharing the cost like a co-op. So it's like $1,000 a night, the shared cost, and there's no markup on that.
Okay. So what you guys found with the previous business that your buddy was working for, was it basically these billionaires just had a lot of money and were signing checks? What was the value proposition for that old product? Was that they just wanted to be part of something? They weren't necessarily even thinking about the investment returns. They just wanted to have that kind of country club community and access?
I don't even think it was the community necessarily. It was the ability to vacation in a home and have some comfort when you show up, that the pictures really represent what you're getting, and that there's some consistency on the service, on the pre-trip planning. And that was absent back then. It's more common now, but still, if you go online and try to find a home to rent, it's an effort, and you hope the reviews are not phony reviews, and you hope that the pictures are current. But back then, if you want to travel, you're renting a home, or you have your own home, or you're going to a hotel, and you're realizing it with your growing family and friends, you're now cobbling together a number of hotel rooms, Or if you have kids, you're literally shutting the lights out at, 8:30 if they're young, and you're there with your, spouse saying, shh, nobody could talk, let them go to sleep. And then like you're literally lying. That's if you're sharing a room.
Yeah.
So that gets a little tough if you've got the means to, have multiple rooms, and you look at the money behind that and you're saying the experience of having multiple rooms with your kids, teenagers or not, and then, getting them to meet you in the lobby, that's different than being in a home where you're in your, bathrobe making pancakes in the morning.
Yeah.
It's just a different experience.
Yeah.
So people wanted the experience of being in a home with their friends and family. They just didn't know how to do it easily with confidence on what you get when you show up. So those destination clubs really filled a void of giving people some confidence that you could have some comfort when you show up. It's going to be what you expect. And if it's not, at least there's an organization there that would get behind you and, take care of you and make it right the next time.
Yeah. And I think that's so true with the confidence part, because once you get into that higher dollar amount, $3,000 a night, it comes with expectations. And when expectations are missed, you have really unhappy people and customers. So if you can fill that void and provide that confidence, I could definitely see it. I see on your guys' website, you talk a lot about the value proposition comparing against, say, a second home or a timeshare. But in your view, how's the easiest way to describe it? Is it simply on, or what's the realm of pros that you would say to compare it to, say, a second home or a timeshare? Yeah,
well, if you own a second home like you do, and yours is in a foreign market, trying to manage that has some hassles. Like, and if you're the type of person that likes doing those things, that's fine. But we attract people that sometimes actually have their second homes. They know exactly what it's about. In fact, 40% of our base actually has their own second home. This is in addition. Equity Estates investment is in addition to their second home. Others have had second homes or just know enough that it's a hassle. There's a property management concern of you go to the home and someone has to go deal with meeting the electrician and just fixing stuff up when you show up at the home. It's like you go away for a week or two, and maybe you do this in Barcelona where your house is, you've got to inspect it and meet with all the providers that haven't seen you since the last time you were there and make sure all the work they were supposed to do what got done. And all of a sudden, a half a day, maybe 2 days of your time there is now eaten up with this, management responsibility and taking care of the asset. So that's a hassle for people. So we obviously take care of that. And from a, investment return perspective, most of these homes, people are not living in. They want destination diversity, right? They want to travel to not just Barcelona, but they want to go to Soto Grande and, other great destinations, domestic and foreign. Wanderlust, people, say now, people just want to experience lots of different beaches, not just, a beach. So the trends are in favor of having access to lots of places to go that you like in the second home environment. And we see that growing in that segment of the marketplace. So we check the box for all that. I'll answer the timeshare question in a minute, but from a return perspective, our conversation with our investors really talks about taking money that you brought parked someplace right now, either in equities, bonds, whatever it is. And it's like, well, park it with us because we're going to put it to use in this asset class. We take a management fee of 1%, just like your private wealth manager is probably doing. And we're going to have this experience for the next 10 years together. And we're going to make sure your family and you and your friends, when you travel, are having a great time in these homes. And then when we liquidate, the management team that put this together isn't going to make a penny until you get 100% of your original investment back, and then 80% thereafter. So we're aligned to do the best we can to buy right. Otherwise, we're not going to have what we want at the end, which is, our share of profit taking. The markets will do what they will do, I guess, over time. I think it's a good hedge against inflation to have, a diversified portfolio of homes in these kind of luxury markets. The markets have done well over time, over the long haul. And then the usage component, some people will sharpen a pencil and look at that as a return. And here's how you'd have to look at it if you wanted to do that. Yeah. So you recognize that it's probably 3,000 or more per night. And if you're getting 15 or 30 nights of travel, and that's how much you're vacationing, you're spending $10,000, $20,000 a week to go someplace, sometimes more. So with us having this shared cost, like a co-op, it being like $1,000 a night, that's a $2,000 to $3,000 savings. Multiply that by 15, that's 30 grand. By 30, that's 60 grand or more. And some people will take that savings, that after-tax savings, and put it over their investment to get into the fund and say, that's an annual return that I'm realizing. And if they don't see the value of that, then, they may not be a fit. Some people say, well, I could afford to spend $3,000 to $4,000 a night, but, I'm not going to. It's like, okay, well, you're right now at the Ritz-Carlton with 2 rooms, you're at $1,000. That's us. So now have 4 or 5 rooms and some chance at the potential upside in the end. Right. So that's how that conversation goes and what the investment looks like. And they should get their money back if we just have the homes appreciate 2.5%, 3% a year. And that's pretty standard to expect. And then obviously anything more than that would be gravy and getting some profit taking.
Yeah. So you guys' fee structure is you take 1%, which is sort of a nice to have operating cost, but not getting anyone on your team above and beyond. So your interests are really aligned with the success of the fund long term, in which you share in profits 20%. Yeah, 20% of the upside, right?
Yep. It's called a promote or a success fee. And again, that's only after everyone gets back 100%. So we have to be fortunate enough that the homes appreciate, and at the time that we're selling, that obviously there's enough there to return 100% plus appreciation, which is what we're all hoping for.
So what I think a lot of people are going to be really interested to hear about is just the properties, where the properties are, what's the kind of general characteristics of the properties, and how diversified and different markets are they?
Yeah, well, if you go to equityestatesfund.com, you'll see a lot of our homes that are documented there with nice pictures. Some people use the term mansion porn, and they're just gorgeous, right? They're right on the beach, or have nice ocean views. They're ski in, ski out locations, or in an area with those kind of amenities. We look for villas, so non-city. We're looking at 4 to 6 bedrooms. If we're in a city, it's usually 2 bedrooms, sometimes 3. And when we have a budget of, in this case for Fund 4, we're looking at $3.3 million average to spend on a home. They're pretty nice.
Yeah. Wow.
Once you're there, you want to stay there. In fact, people sometimes will book because they have a personal travel concierge. That's part of the model, right? We have a staff that gets to know the family, and they're traveling with kids, traveling with friends. Is it an adult kind of experience they're going for? So, we'll put a whole itinerary together based on, what they're sharing with us, they want to do and how busy they want to be. But it's not unusual for people to have a packed itinerary. They show up at the house, and then all of a sudden they're canceling stuff and just want to hang out at the house.
Chill out. Yeah.
They got a private chef coming in. They're around the pool. They've got someone making them drinks. And a lot of these homes are just oases in and of themselves, where you want to spend some time. And if you are with your kids, they have a separate room, and some houses have a pool table or, some games around for the kids. And that's always a pleasure.
I don't know what the term's called, but I got a buddy that does this. He'll fly 12-hour international flight to some exotic location and rent a really nice kind of penthouse room, and he'll just never leave the room, never go out and do anything. He just loves being in a foreign place in a nice room. And I'm like, hey man,
wow.
To each their own.
That's unique. Not even getting out in the streets to just explore the place.
Yeah, maybe to the pool,
He must have someone coming to visit.
Yeah.
He's getting a flavor of the environment somehow.
Good thought for sure. Well,
I suspect that he's not married.
No, he is not married. He's been on this podcast before. I'll have to leave a link in the show notes. So where are the properties typically located? And second part of that question is, how do you go about getting new properties? Are there like markets that your investors are like, hey, we need a property in Tuscany? We'd love to have one. Or is there some other criteria that kind of leads that charge?
So a lot goes into where we want to invest. For starters, the general footprint for Equity Estates is North America. So we're looking at USA, Caribbean, Mexico mainly, a little bit of Canada. We do have a property in Florence and Paris and some of the European cities. But most of our European and Far East access is through a trade partner. So a company like us out of Europe that has properties in a different area of the world, and we just trade. Actually, it's a non-cash trade relationship that's worked out really well for 9 years now. So that allows people who invest in equity estates access to 25 different countries plus around the world, hundreds of homes that they can go to. So that's real attractive to a lot of people.
Cool. What on the user side do people need to know about the minimum investments and the usage?
Well, as I said, we typically package these in 15-night increments. So an executive membership interest, that's 15. Then we call the elite membership interest a 30-night package. And then the advantage is 45 nights and so on. We have some businesses that have bought, multiple we call them units per se, and it's a membership interest in an LLC or a unit, and they have 180 nights that they're sharing amongst all their directors in their company.
Oh, how nice!
So that's a nice perk, and the company loves that all the homes are decked out with really fast Wi-Fi and mesh networks, and so they know they can get a hold of these guys and get a little work out of them when they're working if they need to, or not if they don't want to. But I've heard that talk with a lot of businesses. Some businesses use the homes and send their clients to say, hey, look, one of my ski properties is available for you. You've been a great client this year. Why don't you, I'll overlap with you for a couple of days and I'll leave you be with your family. So let's ski for a couple of days and then you handle the rest of the week on a 7-nighter. Yeah. So that's available. So right now it's $285,000 for that executive membership interest. That goes up as we sell out the fund and buy more properties. And it goes up in about $250,000 increments for the 30-night, 45-night and such. So people are writing a check for either, $285,000 to $500,000 or more. So
the value proposition is invest at $285,000. You're going to get access to 15 nights per year at these villas around the, anywhere that they're available. At the end of 10 years, the expectation is that you make a return on that $285,000. And then 10 years along the way, you're enjoying the properties with less headaches of owning your own.
Yeah, and there's a shared cost, right? So we have to maintain these properties, taxes, insurance, maintenance, the concierge team, your personal travel concierge, all that's covered with your annual dues, and that works out roughly to be about $1,000 a night. We don't charge by the night, so it's like a quarterly fee or annual fee, depending how they want to pay it. And it's actually booked as additional capital contribution. We don't make money on that.
All right. And then I think what a lot of people are really interested in is just the experience of using the properties. So you guys have actual team, do you have team on the ground, or do you work with kind of property managers where these villas are located to support the concierge services and stuff? So our concierge experience has a few touch points. So you have the pre-trip planning before you go. And then when you show up, your itinerary is handed to what we call a local host. That local host could be part of a company that services companies like us, or it could be an individual that we found. And we have both in the markets where we have properties. That person will orient you to the house, show you how the jacuzzi works. They'll show you all the groceries that were stocked for you that you asked for. Our homes have a staple already of 85 different consumables, salt, pepper, Glad bags, aluminum foil, olive oil. So that's always there. And then of course your cold cuts, your case of beer, your wine, liquor, whatever you'd like, that's all purchased for you. You pay for your groceries and the consumables are there already. But it saves you a trip to the grocery store. A lot of people complain, you show up, you're gone for 3, 4, 5 days, 7 days, and you're spending the first half day, shopping. That's right.
So it's really nice to have someone just have that all there for you. So local host meets you, shows you where all your stuff is, lets you know how to use the home. And then they give you their cell phone number, and you could call anytime with questions, driving directions, or if you want to change something in your itinerary, you don't want to scuba dive on Tuesday, you want to do it on Thursday. All the information is there for you to call yourself or to have your local host call for you. And every market, we have resources for property management, right? We've got to care for these assets for the long haul. So we're caulking and painting and touching up and, making sure the air conditioning is being serviced and the filters are changed and all that. So we've got resources in each market, again, either individuals or companies that help us execute on that.
Yeah. So every time you go in and buy a property in a new market, you have to find that resource to be able to take care of it. That's, I think, that's definitely something I underestimated. You have money in a Vanguard account, it's sitting there collecting dividends, theoretically growing each year. And then you take that money out and you buy a property, and all of a sudden that property owns you pretty quickly. Like everyone's got your hand in your pocket.
And your time. It's not just your money, it's your time.
We just did a last episode with Bill Perkins. He just wrote a book called Die with Zero. And he was just talking about how like everyone, saves up money basically till they're 60. And then they retire when the time utility and the utility of money in general is less. Because, when you're older, you're not skiing downhill. You're not going out in strobe lights and doing your raves. I mean, there's just so many things you enjoy doing less. And he said, well, all the billionaires he knows, it's all about time. So when you're flying private, it's not just about luxury travel. It's about time and saving that time. And it really resonated with us. And it's true. Like you go, every time you go on a vacation for 5 days, you go to a grocery store, you spend half the day shopping for groceries and putting the groceries away and preparing things. And all of a sudden, I just lost 1 day of my ski vacation just getting stuff ready.
Or what if you pick the wrong restaurant or the wrong horseback riding group and you just have a bad experience and you're there for 4 days? Like that could ruin an afternoon. Like we vet all the experiences and activities, and that time issue, we agree, is just as important. Obviously, we're advocates of people getting away and having vacation experiences, but we have families that have invested in equity estates almost like people invest by signing up for a gym just to force them to go. So we've had couples like thank us and be like, you've saved the marriage, you've saved the family, because we force ourselves to use our 15 nights or our 30 nights. And that's something we just don't want to not use, have it go by the wayside every year, because you got to use them during each year. It sort of renews, use it or lose it. So they really look at it, and their personal travel concierge is like their coach, and they call them and say, hey, we got to get some dates on the calendar. Do you want to go skiing this year? Do you want to maybe just go hike in the mountains over the summer, and get people out committing to spending time with their loved ones someplace else? It's great. Yeah.
So true. And it really does come down to meeting or exceeding expectations on these types of trips, because you can easily go spend $4,000 a night and have a horrible time because you went there with expectations it was going to be amazing, and 2 or 3 things went wrong. You got held up in line. The restaurant you chose or the activity you chose went bad, and all of a sudden you miss your expectations. You're frustrated, and the trip goes sour, and there's something definitely to be.
And then here's another part. Then you put the figures at who planned this. Right? So you're putting it at your wife's putting it at you or your friend or whomever, right? If it's a guy's trip, you're like, who stepped up and did this? Who chose that? Yeah. That's like a lot of pressure, especially when that person probably is busy themselves, doesn't do this every day. And now they got stuck with that burden, and no good deed goes unpunished. And so they just wanted everyone to have a good time, and half the group is pissed. So we relieve people of that stress as well. And people do note that's a nice little feature.
Yeah. So I guess you guys have become very proficient in property management over the years. As one thing that I've realized again, that it's a lot to put together, especially a property in, say, North America. You have insurance, taxes, you have I got a house in South Carolina and everything looked great, and we closed, and then I found out it was going to cost me $450 a month to water the lawn. And I'm like, what? I'm not even going to be there except for 3 months a year. And there's all these bills that come in. But one thing I wanted to ask you is just how do you keep track of all the bills for all the different properties? Keep it organized, keep it, is it all pulling from one bank account and then you reconcile at the end of the month? It's just, to me, that would seem like so much to oversee and keep organized.
Yeah, well, thankfully I've got a great team. We're 21 full-time people strong now, and of course in every market we have these independent contractors and other property management companies. Our finance department is, because we have some part-time people and some full-time people, I'd say it's really efficient. We've got 2.5 full-time equivalents, and they are on top of it. We have a great relationship with our bank, and we have every home is owned by a unique entity, right? So it's our Hilton Head properties, Giant Beach LLC, because we showed up, we're like, oh my God, the beach is huge here in South Carolina. You live in South Carolina, you know it. Mm-hmm. You can ride a bike on it. We're like, Giant Beach. So we named that one Giant Beach, but we have a unique LLC for each. That's then owned by the fund. So come budget time, or when we're sending money out, we pull the bank help us set up what's called a zero balance account. So Giant Beach has its own unique bank account. So any expense that we're paying on behalf of Giant Beach is going to come out of that account. And even if we have a credit card, we're going to like pay that credit card and assign it. So, we use an accounting software, and every home has its own classification ID number, and every expense gets tracked. And internally we have a role that we call a destination manager. So to us, that's like the GM of a property. And each DM has a half a dozen properties they're responsible for, roughly on average. So they know everything that's happening. They're also the ones that will do the pre-trip planning, because they know the house the best. And they know that if an investor before you complained of a little loose handle upstairs, and we have someone coming in during your trip, we'll take care of it as best we can when no one's there. But if we need to, and Sam's going to be there next week on Tuesday, we know someone's coming Tuesday afternoon, that DM is going to say, just by the way, someone's coming during housekeeping between 12 and 2, they're going to come and tighten that, that faucet. So we've got the detail down with the help of the DM, and they meet with the finance department every single month going over our expected budget for the year. So we budget in the fall for the following year. And in addition to looking at the detail of the entire year, we are always updating a 10-year pro forma of what we expect these homes to need. So we're looking at, well, the equipment says the AC should last 7 years or 10 years, but we know that's a beachfront property, salt water, and we have a maintenance program, and we wash it off of fresh water regularly. But you know what? We should do some preventative maintenance in year 5 or 6. And a lot of renters will just say, hey, if it ain't broke, don't fix it. And we've had evolve over 15 years to say, you know what? Preventative maintenance makes sense, because if Sam's there and we say it's not broke, don't fix it, and we're getting to year 7, 8, 9 past the life expectancy, and it goes down, and then you have no air conditioning for a couple of days, that's not great. So we take care of it down to that level of detail with the support of the finance department, the destination manager, and the local host for really every expense that's required.
For the typical person that's using the 15 days, I'm not saying that's the typical in the investment fund, but if you're using 15 days in a year, what does that look like with your average investor? Are they doing 5 trips, 3 days each, 3 trips, 5 days each?
That's a great question. So our average actually is 4 to 5 nights. So in that case, that'd be 3 trips probably.
3 to 4 trips, yeah.
Others, they want, 2 7-nighters. They want a 7-night and an 8-night get and they're done, and they travel in addition to us. We're just part of their annual travel solution. Maybe they have their own second home, or occasionally do go to hotels and resorts. I mean, people travel heavily in our group.
And do you have any caps? Could you use all 15 in one shebang?
You could. So we've had that very rarely. Our documents actually have, for every executive membership interest, or every 15-night block, we try to say you should travel no more than 18 nights, usually 14 nights booked, and then you could extend for another 4 nights. But if you own an Elite or an Advantage, you could theoretically say, I'm going to Aspen for the whole for all of June. I want to be there for the whole month. If you plan ahead, you can do that, which would be awesome, right? It's that house we bought for, I mean, you know how expensive Aspen is. This is East Downtown. We bought it for $3.7 million. Within 24 months, it was valued at $4.1 million, and we haven't even done the basic renovation of paint and furniture, which we're doing now. So we'll get money out of that. But it's a very expensive environment. So yeah, you could be there for a month, but no one. That's very rare. We have one family we have 450 unique families that are across all the funds. We got one family that are really big fans of Anguilla, which is a gorgeous property. It's amazing. And they do like spending a ton. That's their primary equity stakes property that they go to. That's not typical. People usually like I said, they want to go to lots of different beaches, lots of different city locations. We had one family say, I'm doing this for New York. My wife wants me to buy a place. We live in Wisconsin. We both used to live in New York. That's where we met. And you're saving me from buying my own place, which would have cost a hell of a lot more. And so not only did they buy in, of course, after being in for a year, they wanted more time and they wanted to travel to other places. They don't do just New York. Like, people think they want to join just for like one area they love, but they always wind up traveling to others.
Yeah. Speaking of Colorado, I was just out there for all last month. I'd never thought of going out west in the summertime. I've always been like, oh, Europe, summertime. It was paradise. Like, I didn't go to Aspen because hotels are like $700 a night. And I'm like, I'll just hang out in Keystone or Steamboat.
Sure,
kind of a fraction of price. But man, it was unbelievable. I bet that Aspen property is stunning.
It's gorgeous. And I got to tell you, even I find myself outdoors more, as I'm sure everyone does, hiking more, working out more. It's just more fun to do in a beautiful environment, beach or mountain for that matter. But I'm with you. I love it. I love it in the summers. So
we have a group that's called our Patreon group. Basically, it's kind of we have our Boss Lounge and Facebook, which is most of our members, and then we have Patreon, basically help just kind of support the show. But we try to bring them into some Q&A towards the end of episodes. So I have 3 questions here from them. You ready to take them? Yeah, sure. All right, sweet. So we have one from Jerry. He says, do you guys have any upcoming investment options for non-accredited investors? And is $250,000 the minimum investment amount? Are there any prospects to bring that down in the future? Right now, we have to only sell to accredited investors. That's a requirement of the type of private placement that we have. So the only option for a non-accredited investor is if we allowed some type of rental program, like a marquee jet card. We could have an equity estates card. So that would be the only way to accommodate that. But we're not even offering that right now. So we like sticking with our basic model. And the minimum investment is actually $285,000, and that's part of the uniqueness of what we offer. I think once you start selling in smaller chunks, like a week at a time, you do start looking more like a timeshare. You asked me that earlier. If you want, I'll answer some of the detail around how we're very different. That's a legal structure. And was designed and helps developers of hotels and condos basically sell for a much larger amount than they could otherwise. So a whole home, maybe they would sell for $500,000, and that'd be a 2-bedroom suite, and they would sell 50 weeks and sell them in 1 or 2 week chunks out of the whole year, and they'd be collecting literally $1 million or more on that. So how do you ever get liquidity on that is tough. And that's why they typically sell for a loss, because you got to find some other timeshare interested party. Right. And then you're locked into fees, for life. So the quality of the product and the price per square foot of the product is very different, and the legal structure is different. So we've got the private placement. We own these homes with the deed. We could sell these homes. There's a market for that. You're not relying on someone interested in this collective asset ownership or shared, model. You're waiting on us, the normal traditional second home market, which is still robust, selling in the future. And that's your path of liquidity. So the ownership structure, quality of the property, and how you make reservations. So timeshares, you're usually in some type of rotating calendar format. You're a letter, and when your letter comes up, you get to pick your week, and then you get some flex time. You're trading. It's difficult. With us, we underutilize the assets, as I said, and first come, first serve. Just open up the calendar online 24/7. We have a software portal, investor portal, for people to book anytime they want, and they can book out as far into the future as they'd like, or short-term notice. And so that's what's worked well for us. So those are some of the differences. And anyway, there's my long answer to Jerry's question and the timeshare question. Great, yeah. And for bringing people to the properties, like if you could bring your buddy, you could bring a client, like you said. So it's kind of like some people say, you don't need to own the yacht. You just need to know somebody that owns the yacht and be good friends with them, right? That's true. And you could even send, so we call that unaccompanied guest usage. Early on, the destination clubs did not allow that. We all out of the gate in 2006 said, you own these homes, right? We're as fund managers, we're just shepherds of all these investment money to buy these homes and have great experiences in the homes. If you're comfortable having someone be in your second home, then we should cater to that. So Sam, if you were an investor and you want to send a friend, we'd call and say, hey, Sam, you call your personal travel concierge and you'd say, hey, my buddy Paul wants to
go enjoy Beach House. I see this a lot open in June. Can you follow up with him and find out where he wants to go? And you'd send a little text or a note, and your personal travel concierge will take care of the rest.
Beautiful thing. Pretty exciting.
Nice.
Yeah. So next question is from Zach. How does your affiliate portfolio work on the business side? Do members simply get access to these luxury rentals? Do their dues go toward the affiliate properties at all? I'm guessing the affiliate properties are the companies similar to Equity Estates that you guys partner with in different markets?
Yeah, we'll only partner if we've got confidence in the quality and type of, not only the homes, but the services, around the homes. They have a host system as well who meets you at the property and orients you to the property. Certain foreign destinations, even in our own portfolio, actually has on-premise help. So in Belize, in Ambergris Caye, we have caretakers that live in the house, and they're there for you, and they take care of the property. In Costa Rica, we have someone on-premise, so that helps. Punta Cana, we have some on-premise daily housekeepers. So that adds to the experience of some markets. So our trade partners are just that. So we allow their folks to enjoy our properties, and we do the same, and we manage that with a governor, right? So we have two internal champions, one for them, one for us, that are constantly sharing calendar access and making sure that not one company doesn't have, a lot more nights scheduled than the other company's portfolio, and vice versa. So we want to keep that balance. So we have a governor that we've contracted for, and there's no cash exchange for that relationship.
Can you talk real quick just about the different funds? There's right now, I think it's Fund 4 that's available, but you have previous funds that have been what's the word?
Fully subscribed. So
fully subscribed. Yeah.
So they use that. It's interesting. They use the following terms. So if you set your target and you say, look, we're going to do a $30-40 million fund, when you raise that capital, they actually use the term terminated. Like your fund is terminated. The whole company is not gone, but like the offering has come to an end. So they call it fully subscribed, oversubscribed, terminated. We use the term sold out. So yeah, we're into Fund 4 now. The first one started in November of 2006, and that's the first fund that's coming to a horizon next year, where we'll start liquidating the properties.
Are your investors excited about that? Like they're going to have to re-up if they want to stay in the program, right?
We did some surveying. We were surprised. 65% have indicated interest in hearing what we have to offer to stick around. Right. So we have to honor the liquidity event. We're going to sell the properties. But for those that say, I don't want my cash, you hold on to it. Let me sign some other paperwork. I want to keep traveling in Equity Estates. So we'll have some go forward solution for those people, but we'll honor everybody that wants to get out. Of course, as people that have been around a while, since 2007, 2008, 2009, it's a little long in the tooth for them. Their life has evolved. Their kids maybe are not traveling with them anymore. So those folks obviously want out, and we'll have that path available for them.
And anyone to invest in any fund can access all of your properties. Is that correct?
That's right. Yeah. So we share internally amongst the funds. When you're reserving a property, you don't know. Well, there's a place for you to find out exactly which fund owns it if you're an investor in the investor portal. But even with that, we check the usage across the portfolios to make sure that's fair and balanced and in check. But because the ratios are pretty much all the same for all the funds, then it stays normalized.
Sounds good. One final Patreon question, and then I have a really short question just to conclude. But Arcrit asks, I can't believe I didn't even ask to mention this, but are you seeing any impact with COVID in this new fund and in, of course, in the usage of properties, but what are you guys seeing right now?
Yeah, it's amazing. And I feel fortunate and blessed. We're getting an uptick in demand. People are recognizing they'd rather be in a private home. We know how we're cleaning these homes. We can talk in detail about what disinfectant solutions we're using that actually are tested and kill COVID with other viruses as well, right? So we were right on it with making sure that we have a cleaning protocol to support what has to happen in between, investor families, and people want to be in a private home. So it's been a good time for us. I hate to, say that publicly, that during this very hard time in the country and the world for a lot of, people and families struggling, the families that are well-to-do that are used to spending money in hotels are now migrating to these private home offerings like Equity Estates.
Wow. All right. My final question is, Phil, what is your favorite property of all the ones that are in the portfolio?
Oh, gosh. I'm not prepared for that. They're like, that's like asking someone who their favorite child is. Even if they have one, they wouldn't tell you. No.
Everyone's got one.
So a perfect couple of weeks for me is like beach ski or ski beach. So I do love Aspen, and love being in that market. I also love Telluride, and our home in Telluride overlooks the San Sofia mountain range with unobstructed views. There are these huge picturesque windows. Like I could be stuck at that kitchen table working all day and so happy and relaxed just seeing that outside the window.
Wow.
It's great. So there's a couple of mountain properties for you. And on the beach side, I'm a big fan of the Caribbean, and we have a beautiful home in St. John. And that is an island that gives you everything you'd want in the Caribbean, plus a lot of national forest to go hiking. And the topography is such that you can actually go into some different environments, much cooler up top in wooded areas, and then, down on white sand beaches later in the day. And that's pretty cool. So I like that property. But again,
you named some great places in the Caribbean already. Yeah, it's unbelievable.
Yeah, they're great. We just closed last, actually it was on the 14th, I guess, of August, on a place in Pamia in Los Cabos. Second row, oceanfront, just, beautiful. During the winter, you can see the whales just hanging outside on your porch and see whales breaching, outside in the water. So that's pretty cool. They're all great. And like you said, these mountain properties in the summer are awesome.
You have anything in wine country?
Napa Valley. We have a Calistoga Ranch. Actually, we have our own lodge there.
Oh, wow.
And actually, it's one of my wife's favorite places. So you could hike, you could go there and not even go wine tasting, and hike and ride bikes and do balloon rides. And the restaurant scene is amazing. That's awesome. So yeah, so we're out in Napa.
Too good. I can't help but just smile through this episode thinking of all the properties.
It's fun. And I've got to go out and find these and buy these properties and keep tabs on them. I'm very fortunate, very blessed, love what I do every day.
Phil, it's been a lot of fun having you on. Anything you want to leave the listeners with? We'll, of course, leave links in the show notes to everything, all the material, but anything else before we close out?
I guess just a reference, as people are looking for options to travel in places like we have at Equity Estates, they'll find options out there. We've prided on ourselves in our transparency and alignment, and we went out of our way since day one to get audited by the 5th largest firm in the USA. It's now, they go by RSM. They used to be called McGladrey. So we have a full comprehensive audit. They come into our offices and they pull every contract, every independent contract. They get to inspect whatever they like, so they can write a report to give all the partners comfort that all the places we said we'd spend the money, that we did it all in the right places. So we've had a clean audit for 15 years, and that's unique to us. We're not trying to put heads in beds per se, like a hotel operator would do, right? We underutilize the assets. Other companies want to rent out all the spare nights, and they'd say, oh, that's going to lower your dues. It's like, well, our folks could afford $1,000 a night. That's pretty low for a place that would normally rent out for $3,000 or more. If you want to aggressively rent out, then you're sacrificing your access to save a few $100 more.
Yeah.
And we want to attract families that would rather just use the time themselves. So that's
families or individuals, right?
That's right. That's right. Or individuals. You're right. Good point. We have plenty of individuals that do invest, and they travel with their friends and they have a great time.
Sounds like a good plan. This has been a lot of fun. Thanks for coming in and sharing everything about Equity Estates and a bit of your background as well. And looking forward to tracking more of what you guys do in the future. This episode was actually recommended by some of our Patreons and members to try to get on the show. So I know everyone's looking forward to hearing it, and we'll be looking forward to sharing next week. So thanks, Phil.
My pleasure, Sam. Thanks a lot.
Hey bosses, I want to tell you about this week's sponsor, Indeed.com, the #1 job site in the world, because Indeed gets you the best people fast. So right now, there is a huge movement of remote work, and if your business is hiring, you have the potential of reaching people across the US for your job. But either way, if you're hiring locally or remote, you only have to pay for what you need, and you can pause your account at any time, and there's no long-term contracts. Unlike other sites, Indeed gives you full control and payment flexibility over your hiring. So right now, Indeed is offering our listeners a free $75 credit to boost your job post, which means more quality candidates will see it fast. Try Indeed out. The free $75 ad credit at Indeed.com/ILAB. That's ILAB. This is the best offer available anywhere. Go right now to Indeed.com/ILAB. Terms and conditions apply. Offer valid through September 30th, 2020.
Wow, that sounded like such a billionaire fund, but something that actually is more affordable than originally thought. When he first told me that the properties were $3 million a piece, I kind of just assumed that the buy-in would be so high that it would just be out of reach, but it's actually the exact same price as the one condo I'm considering buying here in Sri Lanka.
Yeah, I felt the exact same way when I started looking into it. I'm like, this is going to be for kind of the top 2-5% of Invest Like a Boss listeners. But actually, it's basically within reach of anybody who is considering a second home or already owns a second home. The initial investment is less. The only thing to really consider is the carry cost, the operating cost. I think that's going to be the main consideration for a lot of people, and stacking up that figure compared to what it would cost to own and operate a second home on an annual basis, which I think could be more or it could be less depending on, of course, how big that house is and what market you're in.
Yeah, definitely. And I think the 1% carry cost actually wasn't the deal breaker for me. I'd be happy to pay that. It's the $1,000 a night and I know it's not a nightly fee, but it's the equivalent of $1,000 a night as a, kind of overall yearly fee that, to me, I'm thinking I can see this being a great opportunity for people who actually spend $2,000 or $3,000 a night in hotels or, renting out mansions or private villas. But for someone like me who wouldn't mind, investing $288,000 or even $500,000 into a investment property to use, and I might only use it 15 or 30 days a year, but I don't want to pay $1,000, on top of that big investment. To me, it sounds insane, but the more I listen to him and where that money goes to, I understand why he has to charge that.
Yeah, so that's the carry cost. That's the operating cost that would be, you would want to compare that to how much it would cost to own and operate a second home. So for a lot of the homeowners out there, not necessarily a condo owner, the minimum level of the equity estates investment is $275. I think it's $285 now. And the annual carry costs on that are $13,500. You get 15 nights of that. So like Johnny said, and as we established on the episode, it's about $1,000 a night. Now, if you compare that to some properties we own, right? Like my Thai properties cost nothing. It's like less than $1,000 a year. The Barcelona property is somewhere probably closer to $8,000 to $9,000 a year. But my Florida, or my house I just bought in South Carolina, even though it's an inexpensive house, the carry costs on that are going to be close to about $1,000 a month. Like it's close to $400. It's $400 just to water the lawn, right? Mm-hmm. So now if you're at $1,000 a month, you're at $12,000 a year, which is basically on par with equity estates annual investment. So I think that the main comparison is when you invest in equity estates, you don't have to worry about anything. If you can use properties all around the world that are way, way nicer than like my South Carolina house that costs almost the same, right? So I think for certain investors, certain people, this is more of a lifestyle investment, right? But for sure, for families, I think this is really appealing because anyone who's gone with a family of, 4 to 8 people and just rented hotels or even a small dinky house, it gets stressful quick having that many people cramped into small spaces. So having access to a place like this 2 weeks a year would be super awesome.
Yeah, I definitely see the benefits of it. And I do believe that, 10 years ago, this was the best option. But now, this was before Airbnb rentals, VRBO, and all these other ways to rent, houses or even mansions, on a whim. And nowadays, if someone, if you didn't mind paying top dollar and you don't mind paying a bit, extra and to be assured that you're going to have an amazing place, just select the super host only option on Airbnb. You're probably going to end up paying 30% more than if you searched around for a good deal. But then you would be assured that the photos match, the service is good, that everything's going to work. And, you're not going to spend $3,000 a night. You're probably not even going to spend $1,000 a night, even for the, a 6-bedroom place on Airbnb.
Mm-hmm. Yeah, that's definitely a great alternative. Well, have you looked at the photos of the properties yet?
Yeah, they're amazing. And it's hard, it's hard for me to put, it's hard for me to put like myself in the shoes of the ideal investor of this, because it's not me. I travel way more than 15, or even 30 or 45 days a year. And I like looking for deals. I do understand. I actually hate, looking for deals and like wasting the time to book everything and then arrange everything and then go in and check in, all that stuff. And I can see for a busy person, a busy professional executive, or, someone with a big family and they have to deal with all the stuff, that $1,000 is a kind of a headache saver for them, and it's worth it for them. So I think that's another reason why he kept mentioning the word family, because I really believe that is what it is aimed towards. If I had, wife and 2 kids and, wanted to travel with extended family, her grandma, her parents, or, my sister or whatever, and I don't want to deal with it, I would love to just have a concierge, say deal with all this stuff. I don't want to do anything. Like, I just want to show up and I just want to chill out, because I work, a hard, stressful corporate job. But I think that's a very small sliver of people. But I wonder if Equity Estates is more targeting that really small sliver, that 1% of people, or people that kind of desire to be that 1%, but actually aren't really there yet.
Yeah, this to me is reminiscent of the Bill Perkins episode, where it's all about, for the super wealthy. And this wouldn't even be targeted necessarily the super wealthy, but it all plays into the same narrative where it's about time and efficiency. And with this, we did this last year with my family. We went out to Tahoe. We rented a house down in Lake Tahoe to go skiing. It's about $1,000 a night from a vacation rental company. It was like a 4-bedroom place. Not anything like this. It's probably like a $800,000 house. But when we got there, it was like, the whole first day is like grocery shopping, getting ski passes, getting skis, getting acquainted with the area, figuring out how to get the rental car into the driveway, because there was shit laying all around. We had to move stuff around. And by the end of the first day, we were all pretty stressed, and all we wanted to do is like sit by the fireplace, hot tub, or go skiing the next morning. But by that first day, we were already stressed. We were all kind of cramped in to a small area with a 1-year-old baby. And by the second day, we're like, there was tension already, right? And that's how what should be an amazing family vacation can get spoiled pretty quickly, because it misses expectations. And it would be nice to we know how nice it is to go and visit somebody else's pimp villa, right? And to be able to have that experience, but maybe be able to host people, your family or friends a couple times a year, I think would be really special.
Yeah, I can see that. And I think I understand why they like having a 60% or 57% occupancy rate. So the dates are always flexible and people don't have to, fight for free days. But I would much prefer if they had if they would bump that up to an 80% occupancy rate, where you still, it's still not 100% booked all the time, but just whatever that number is, where they can make enough money from the short-term rentals to cover that $1,000 fee, I would actually invest in this. If that was their model, I would actually probably put my money down and say, you know what, I have upside potential, and I can use a place 15 days a year without worrying about it. I can, these amazing places. I would think about it. But as far as right now, that $1,000, like for me personally, it's not worth it. But I can see, for someone making, 400 grand a year that is busy and doesn't want to think about it, has a family, is stressed out. To them, they're like, okay, you know what? I need to stay in a 6-bedroom place. This is easier than me trying to, figure it out on my own. Why not?
Is there a wealth level out there that this would be a no-brainer? Or just, if you're sitting on 15 million, would you just be like, yeah, this is a no-brainer at that point?
I don't know, because okay, so first I would have to go through the steps, right? Where I would have to, like, it's the same as owning a private jet. Like, at what level would I want to own a private jet? It would have to be, I got tired of flying business class, so I started flying first class. I got tired of flying first class, so I started flying like a shared next jet experience. I got tired of that, so I started, chartering jets. And I got tired of that, so then I want to buy a jet. So it'd be the exact same thing, where I would first have to get tired at staying at 5-star hotels. I'd be like, this St. Regis or this Ritz-Carlton isn't good enough for me anymore. Then I would probably start renting places, these mega mansions, and thinking, this is too much of a hassle still. Then I'll probably consider it. But I would almost guarantee that most people that are considering this haven't actually gone through that path yet. And we're, at least our listeners, a lot of them would be happy staying at the Ritz-Carlton. If you're going to spend $1,000 a night, get two adjoining suites at the Ritz-Carlton. Why not? Yeah.
The only issue I see with these villas is I don't think I would ever leave the villa. And
why would you?
I love going. I love going to a new place. I would say I'm spending most of the time when I'm traveling, I'm at the hotel to wake up, have a coffee, and look at my computer for an hour to two, and then I'm gone basically the whole day, except maybe like a midday shower, and to sleep at night, because I love exploring the city and seeing what's around. And I just know with these places, I would end up not leaving the villa, and it'd be like a staycation of some sort.
Yeah, 100%. 100%. I mean, and you would almost have to stay, at least a week to be able to want to go out even a few days, because like the first couple of days, you just want to stay in.
I will say, I think there's an interesting parallel to investing, that there's this concept of pay yourself first. And make it automatic, right? If you have to think at the end of the month or the end of the year, how much am I going to put away to invest? It doesn't get done. So you take money out of your paycheck or earnings and you make it automatic, so it automatically invests in funds or whatever the investments are. And I think the same is true with experiences. At some point in life, you have to stop thinking, again, back to the Bill Perkins episode, you have to stop thinking about accumulating wealth and start trading it for experiences. But it's still hard, in my experience, to take 5 friends on a $15,000 trip, or take your family and fly everyone business class to get together, right? Like it feels like a lot to do. And I think at some point, in order to do that effectively and really maximize experiences in life, you have to force it. You have to make it automatic. So if you invested in something like this, equity estates, you basically have a $15,000 a year commitment, right? Yeah. And then you have 15 nights, which you're going to force yourself to use, because you're not going to lose those nights. Yep. And then that's one sick trip with you and your buddies. And that's one amazing trip for you and your family that you're forcing yourself to do every year. And I think there's some reward in that.
Yeah, and that's literally the only benefit of timeshares is it forces you to go on a vacation every year. I have a cousin, makes a lot of money, probably in the millions, and he works way too much. He's stressed out all the time. He's working, I would assume, like 80 hours a week or something. Never has any time for anything. But because they bought a timeshare, which I'm sure they overpaid for, and investment wise, it's probably a terrible decision because all timeshares are terrible decisions. For him and people like him, it's probably a great, like amazing investment for his health because it's forcing him to take at least 7 or 15, days off a year to go to Hawaii or to go to wherever and stay at these places.
That's cool. The only thing that my parents have said on that same topic that resonated with me was, with a timeshare or with a second property, you're really forcing yourself to use that property, right? You buy it, you own it, you feel like you need to use it to get value out of it. Mm-hmm. And so you end up going back to the same places year in, year out.
Yeah.
That's what happened with my parents' house in South Carolina. After 10 years, I'm like, I'm so glad you guys built this house. And she's like, yeah, me too. But we've taken basically all of our vacations the last 10 years here instead of checking out other places. So I do think there's value in, potentially not owning a place so you feel like you have to use it and seeing more of the world as you've done so effectively, Mr. FD.
Yeah. I think a way around this would be, okay, so first off, my advice to everyone, if you're considering buying a timeshare, don't. If you for some reason you're like, Johnny, I need to put this money into something like a timeshare because otherwise I'm never going to travel, sign up for Equity Estates. It seems like it's 100 times better in so many ways. But if you're like Sam in your shoes, just put aside, whatever that number is, whether it's 15,000 a year or whatever you're comfortable with, have that auto pull out of an account, sit into a separate account, a travel fund, and at the end of the year, have it directly wired to Johnny, your buddy Johnny, and I'll manage it for you. And hold
it in trust.
Yeah, I'll hold it, and then I'll be like, Sam, we gotta use this money. So I booked us this baller place. Here's that itinerary. Let's do it.
And if you can get us free lodging through your YouTuber influence, then we have even more money to play with and spend on frivolous
things. Yeah.
So it'll be interesting to hear what our audience and listeners think about Equity Estates. So guys, feel free to chat it up in the Boss Lounge, our Patreon group, or other channels. Want to hear. I know this episode was recommended from Patreons. It'd be good to know if anyone's actually invested in Equity Estates yet, and if people are planning to do so. So looking forward to hearing comments.
Yeah, definitely. And Sam, everybody wants to know, because this sounds like something you would invest in. Would you invest in them?
And I was on the fence until I started looking at the photos, and to your point, I have been looking for. I had this concept of this Pure Vita fund, right? Mm-hmm. It was at some point I got super stressed out, like two years ago, with just working for what reasons? Like, why am I still working and stressing out each day about like trying to build things that don't really matter? So I was like, you know what? I want to start. This was before the Bill Perkins episode, but all that stuff remains true. I wanted to set up this Pure Vita fund where like all my municipal bond money that's tax-free goes into some basically bank account. And then I'm forced to spend that down each year for family and friends, like with experiences. I just haven't done it yet. Right. Cause you really have to force yourself to do it. And this is actually, and then I'm thinking, next 10 years in my parents' life, next 10 years with my friends, like those are really important years because in 10 years, like everyone's older, everyone goes their own ways. You typically do less with those people. So I want to make sure to maximize the next 10 years with friends and family with great experiences. And I think this is absolutely a perfect thing. It's 2 weeks a year you'd be forced to do, 1 week with your family, 1 week with your good buddies. So I'm definitely leaning towards doing it.
Wow.
I want to get the I got two houses that I just basically two properties just bought and are renovating and got to get all that stuff settled first. But I think this makes a lot of sense, especially with where I'm heading in the next few years, which I basically don't want to be working. I want to be living full time. So I think this plays in really, really well. So yeah, I'm highly interested.
So while I was listening to your interview, I had my money on that you're gonna go for it. And then after your first week stay, you're going to upgrade to the second package for 30 nights a year.
Yeah.
That's my guess.
I was really actually thinking when Phil was talking about it, about all these corporations that are doing it. I'm like, damn, I'm missing those corporate perks. Like you've basically created corporate perks through being an influencer. Like I'm like in between. I'm like, right. I'm in the startup world where you get like nothing.
Yep.
So yeah.
Well, you know what? You can dish out the perks.
Yeah. Dish out the perks. I would love to. I hope I'm in a position to be able to just do that all the time. What a better life to live, you know?
You know what? You are, Sam.
Just not doing it.
Yeah. Like seriously, like imagine like, even if you took like a insignificant amount of money, something that like you wouldn't miss, right? Like, 1% of your yearly earnings, or something like 5% of your yearly earnings or something, and you just put it in a fund and say like, whatever it is, this money I'm going to spend for friends and family, and or whatever you want, and just be like, this is my fund money. And I guarantee, like in the beginning, it'd be kind of awkward to do, like it'll feel weird, but you're going to get so much joy out of spending that money and seeing the smiles on your parents' face, with your friend, like your friends showing up like, man, bro, like I never would have been able to, to stay at a place like this if it wasn't for you. Like it would be worth it. Like that would be worth so much more than that 5% of your yearly gains. I guarantee it.
100%. Yeah. Sitting in the bank. Right. Well, that was part of the reason I got the Barcelona place was so I have, it seems like all the well-to-do friends that I have are buying cool places. Like Kevin just bought a amazing villa in Bali. Zach, who's been on the shows, buying a place in Japan, like in ski country. And I'm just like, I want a place. I can't host people in Thailand really. Like it's a small room, right?
Yeah.
But in Barcelona, I will be able to do that. So all steps in that directions, my friend. And hopefully in the next year, we'll be doing it instead of talking about it.
I do like it. Even though it is on, like, I would benefit for talking you into investing. I would still think it'd be a smarter move to take that same amount of money or that same amount of carry costs and put it into a travel, would you call it the YOLO fund?
I called it the Pure Vita Fund. The Pure
Vita Fund. Okay. Pure Vita Fund. And just book people rooms at the St. Regis. I honestly, I think it'd be just as nice, if not nicer. It'll end up probably costing you less money. Business class flights and St. Regis rooms. We're done.
I feel like paying that is going to be more painful. It's like the concept of happy money. It's more painful to do that like 3 times a year and be like, all right, call up Regis, let me book you a room. Oh, you're lazy. Like, let me do it. Yeah. Like, but if it's just done and it's basically automatically deducted, and then at that point, that's say 13,500 spent in the beginning of the year. I'm sure they collect in annual dues. And then the rest of the year is awesome because I'm just looking at the houses. Yeah. I'm anticipating where we're going. I'm like, hey, let's get to this location. I got the villa. It's all set up.
Yeah. Okay. I can see that.
Groceries are in the fridge. Vodka's there. Margaritas are made. Like, just show up. That's all you got to do, buddy.
Okay. I'll show up, buddy. You talked me into it. I'll show up.
They need to get a yacht. They should add a yacht to the portfolio.
How's there not a yacht? By the way, I'm going on a yacht tomorrow.
With who?
I can't say, but spending the night.
In Sri Lanka? They have yachts?
Yeah.
Huh. Is it made out of wood?
I have no idea. I haven't seen it, but it's supposed to be nice.
Send me a photo. Send me a photo.
Check my Instagram.
That's great, man.
FTK.
All right. Yeah.
All right, buddy.
Check my Instagram. I'm in my parents' basement in South Carolina. I'm Sam Marks.
Yeah, I am I am Sam Marks. I kid you not. My girlfriend and two other friends are sat on the beach right now with one of those private dinners with a candle lit, and then they're just hanging out waiting for me. So
that's how you're getting all this free stuff. It's your good looking girlfriend and her good looking friends, not your influence. Not lie.
You know what?
So have fun at your dinner, guys. If wherever you're listening to this episode, be sure to subscribe. We have an episode coming out every week for the next 2 months. So
because of you Patreons.
Yeah, big thanks to Derek and the Patreons for setting it up. Amazing episodes coming up that we're looking forward to. So wherever you're listening, YouTube, Spotify, iTunes, be sure to subscribe and be the first to hear these episodes as they come out. And for anyone that's interested in equity estates, check them out at equityestatesfund.com. You can go to /boss. They've set up a specific landing page there, and they'll let you skip the line if you're interested in Fund 4, which is almost fully subscribed. But give them a shout, check them out, and I'll keep you posted, of course, on if I make an investment. Yeah.
And if you guys do invest, invite us to your mansion parties.
Yes.
I mean, I will come.
One night for sure.
One night? No, minimum 2 nights.
Well, if you get 15 people to invest and they all allocate us one night, we're sorted. 15 nights a year right there.
Yeah, but come on, I'm not flying somewhere to spend one night.
Oh, yeah. Good point.
3-night minimum, guys. Sorry. Yeah. But I mean, like just invite us along. Like, we don't need the place for ourselves. Just like invite us along because you have 6 bedrooms. Just give us one of the rooms. Sam and I can share.
That's right. I love it. Yeah, we bunk wherever we go.
All right. Love you guys. Thanks so much for supporting the show. Hope you guys enjoyed it. Sam, enjoy your parents' basement.
Yeah, enjoy your yacht tomorrow.
Yeah.
Dick.
I'll see you guys all next week. Bye, guys.
Thanks for listening to the Invest Like a Boss podcast. Join our mailing list at investlikeaboss.com to get exclusive access to our insider investment portfolios and our private members forum.
If you enjoyed this episode, please subscribe on iTunes or your favorite podcast app. Tell your friends and leave us a review in the iTunes store. It helps more than you know. See you guys next week.